Good to have you back on the Global Business Report. Recently, we have seen tensions in the Middle East drive oil prices higher, with Brent crude inching higher about 0.5% to close at $64.48 yesterday. However, the fear of a massive slowdown in demand growth has also been weighing down oil prices. And joining me to discuss these issues is Robert Omotunde, Head of Research at Afrinvest. Robert, it's good to have you with us, and good morning.
Thank you, it's my pleasure.
All right, now, should we expect a further rise in oil price considering the cooling demand in advanced economies, or do you think the G20 summit will offer some kind of reprieve here?
Well,
I know there's so much expectation.
Yes, so much expectation about the G20 summit again. Factors arising for this particular, or leading to this particular rise we're seeing is the significant drop that we've seen in terms of inventory in the U.S., oil inventory in the U.S. There are signals that are suggesting that OPEC is not in a rush to start, increasing production. So some are saying that perhaps the production cut deal is now beginning to show signs with the sort of rise in prices that we have seen. And when you tie it to the G20 summit, which is coming up, part of the concern, demand is rising because of tension in the Middle East, of course, but trade wars concerns are also part of the issues, that have, resulted in the current positive momentum that you've seen in terms of prices. Again, we are looking at the possibility of the G20 countries, post the summit that is coming up. There might be possibility of, talks that could, warrant some form of, should I say, slowdown in the momentum of tension that you've seen. Do not forget that the G20 summit in itself, when it was set up, part of the issues it was supposed to address are trade issues, apart from financial system or monetary policy issues that it's supposed to address. And by far, the U.S. and China, in this case, are the biggest consumers of crude oil.
Indeed.
And because of the concerns, and again, when you look at trade relations, countries in the G20, account for close to 80%, of trade activities in the globe. Perhaps if you exclude the EU intra-trade, that's when you get it as low as 75%, which is still significant. So we think that there might be talks that would, President Donald Trump is expected to show up, and there might be talks that could, warrant some of them to, reason and reduce some of the tensions that we've seen in recent times.
Very good. Now, in a similar scenario, the continued rise in oil price stemming from tensions, of course, as we highlighted in the Middle East, especially the US-Iran spat, also continues to make global headlines. What impact do you think this will have on the 2019 budget performance?
Well, for what we've seen, in the last few days, we've seen prices rally to above the $60 mark. I think currently is trading at around $64. Our oil price benchmark was at $60 per barrel. Again, two factors are very crucial to Nigeria in this case. One is the oil prices, and the second is production. On production, we seem to be getting our act together. We had some challenges, with some of our export terminals, which we experienced in the first quarter running into second quarter. If you're able to address some of these concerns, it might bode well for the Nigerian economy. But from the price angle, we do not think that there may be a significant challenge, in terms of implementation of the budget, given that the price benchmark is $60. Perhaps it would have been more comfortable at $55. We could have situations during the year, before the end of the year, that would, result in some lower prices, which may not be sustained, for a very long time. But at the current price level, it appears that it's comfortable for budget implementation. However, the production angle, could significantly, because again, the budget envisaged a 2.3 million barrel of production per day. That's not going to happen in 2019 for sure. So maybe if we are able to, get some more prices, you know, I mean, from the price angle, maybe that can help to cushion that effect. But again, the most bullish projection for oil price is not reading anything above $70 a barrel. So Nigeria has its own issues, and we deal with them as they come.
As they come. There's still a lot of uncertainties out there, as it were. Very good, Robert. Now, coming back home, how did the equities market perform yesterday, and what are the expectations for the rest of the week, you think?
Okay, so we are still seeing this sort of, you know, weak momentum in terms of price appreciations. You know, when you see market activities moving, what you see is most investors are buying to the downside, you know, and the result is what you see in price depreciation that we see in the market. Currently, market has lost over 5% year to date. Again, we've seen some sort of momentum, you know, in the market with some investors positioning in bellwether securities, you know, in anticipation of a possible positive number as we move towards the, I mean, by the end of this week, it will be end of the half year of 2019, and we expect companies to start churning out their numbers. There may be a little delay for companies that want to, you know, audit their half year, but what we'll expect, you know, largely, it's not something too fantastic. We're expecting, again, because of the economic issues, you know, macroeconomic concerns, you know, that are also weighing on the performance of these companies. And I think that these are things that continue to play out in the domestic bourse, which is why we are not seeing much of attraction. And when you compare Nigerian market across, you know, other African market, we seem to be significantly, you know, underpriced. You know, again, price to earnings in Nigeria is reading below 7 times, and when you see or consider other markets, you know, they are trading pretty much double digits multiple. Yes, perhaps speaks of value again, but when the tide will turn, or when momentum is expected to change for the positive, is what we are not too sure of, you know, given the different weaknesses we're seeing in terms of sentiment.
Very good. Now, talking about specifics here, ahead of Airtel's listing, we have seen MTN share price sink to 128 naira, 5 kobo, low in yesterday's trading session. Does this signal anything to investors who are expecting Airtel's Africa's IPO?
Again, it's a function of where, you know, investors see value. You know, Airtel IPO, to some extent, we believe the market is happy about this listing. You know, again, this listing will make the second big security to be listed in the ICT sector. You know, and again, that will create, I mean, by the time Airtel listing is done, you know, the ICT sector will probably be the second most capitalized after the banks. You know, so it's something good. But we would not, or I would not, tie it to what has affected the pricing of MTN. You know, I mean, again, it's a function of investors looking at, you know, what value is, and on that basis trade those securities. You know, and in some instances, depending on the volume that is heavy. You know, again, for MTN that is trading above a 100 naira price, you know, you need only 10,000 units to move up the price. You know, so again, if that is the case, a 10,000 unit moving, you don't even need 10 million naira to move the share price up. You know, essentially, you know, so those are some of the concerns that are playing out in the market. And again, it depends on where the volume is heavy, and that's where you see the price is going up. But in terms of the corporate performance of the company itself, is one of the securities that we're very bullish on. You know, by half year, we believe that company would have improved in terms of performance, you know, and will have presented more opportunities for investors, you know, to buy into them. You know, I will buy MTN at the current price. You know, so that speaks of attractive valuation.
Well, attractive valuation and confidence. But I would have thought by now, based on what we've been seeing so far, would you say the enthusiasm that initially greeted the MTN's emergence has waned, or is still upbeat?
Absolutely, it has soon waned. You know, again, the initial optimism.
Yeah.
You know, when a new security is listed, you know, that investors have always wanted to have.
Yes.
You know, and then they eventually had it. You know, pockets of news. You know, as to whether something should have been done in certain way. But I mean, again, there's transparency now because prices are traded on a daily basis. You know, if I want to buy MTN, I can buy at a price that market has already discovered. You know, so to that extent, we could say that, of course, investors are still weighing their option. You remember that before MTN came, markets, sentiment was, I mean, MTN helped a little to reawaken sentiment, for equity. And again, the effect has waned. You know, that's the truth. But we're looking at not just MTN, but other sectors that are currently trading at very low multiples, and that appears fundamentally sound. You know, again, if you want to, equity usually should be a long play. If you're a long-term investor, MTN is one of the securities, for example, you should be buying into. You know, given the current valuation and the expected future, earnings potential, which would suggest that you're likely to, you make very good return on your investment.
Very good. Now, what is your outlook on the fixed income markets following the 100 billion naira bond offer by the DMO yesterday?
Yeah. So the offer was oversubscribed as usual.
All right.
I mean, again, the DMO ended up allotting only the size which they wanted to allot. But what we're seeing in the fixed income market is something very interesting, because you're seeing a situation where the central bank is guiding rates downward in the treasury bills and the OMO space. Now, the impact of that is attraction should begin to shift to longer term securities, especially for fund managers that have a long-term liability structure. So what we'd expect is most of the PFAs and even the banks, the reason why the banks will not want to position heavily in bonds, it's because most of the banks will not hold any of those bonds to maturity, because they need liquidity, which is why they prefer to invest in the treasury bill end of the market. But what we're seeing is interesting is that the possibility of a downward movement in rates at the treasury bill segment is lower compared to a downward movement in yield on the bond space. So what that means is that if yields are expected to go downward by, say, 100 basis points, there's price appreciation in your portfolio, and I think that's where investors should be playing.
All right, very good. Robert Omotunde of Afrinvest, many thanks for your thoughts on Nigeria's capital market and other issues. Good to have you.
Thank you.
All right, we'll be right back after this break. Stay with us.